Hello everyone, and welcome back to another episode of the Midtown View. I'm your host, Jim Wenk, and today with us, folks, we have a very, very special guest. We have Ryan Masiello with us today. Welcome.
Thanks for having me.
Ryan's in the house.
Big fan of the show.
Yes, my man. Ryan is co-founder and chief strategy officer of VTS, the global online data analytics, all things leasing and asset management. And we're going to get into a lot of this because the business continues to evolve quite rapidly. But really, really pumped that you came in to see us today.
Thanks for having me.
Awesome. Well, Ryan, I know we were talking a lot just beforehand on kind of how our business has evolved, but why don't we kind of start it off from very early days. You and I met at JLL, and it has to be 15 plus years ago.
At least, yeah.
And we was a bunch of young, bucks that we were, and salespeople, aggressive. Mostly representing tenants, and successful as we were, and we had a lot of good teammates, good mentors, but I think we did a pretty good job leveraging information to prospect and secure new clients. But I think would love to hear your perspective and view on how we were doing that as a group, as a collective. And how the idea of VTS kind of came up, and how the business became as it did from its inception.
Yeah.
Just I think it's a great story.
Yeah. So I like to tell the story with a little bit of background of just like when I started in the business. So started at Cushman & Wakefield in 2004, and I think this is true of every firm, especially at that time, which is you had basically no training, right? So you start in as a somebody that came right out of college, and you don't really learn much other than trying to absorb as much as possible from the people around you. But I would say the one thing that people almost in a way trained you on, or almost beat in your head, is that all you have is your time, and your time is money. And so the first couple of years, you don't ask any questions. And I would say like around year 3, 4, 5, I really started to pick my head up and say, well, if time is money, why am I wasting half of my day on remedial tasks that actually don't help me make any money? And so, I started thinking a lot about how could I start to make myself more efficient with technology. And I remember I had a sublease right across the street, I think at 599 Lex. And I was like, wait, if I had all my information on a Dropbox, on my iPad, I can at least, I don't have to like get my floor plans from my desk, and I can go from showing to showing and have access to information. And that was really sort of this first idea that led to a lot of the stuff that we were doing, right? Which is at the end of the day, what really matters is how do we make our customers more efficient, right? And so we started doing a lot of, I think, really interesting things in our pitch, and just saying like, hey, you're gonna hear the same thing about the market from everybody else, right?
Yes.
And I think one of the things that made our group unique is actually explaining how much time the process was gonna take, and how we were gonna do everything we can to respect their time and ultimately get them to either equally or a better decision in terms of their real estate deal. And I think after seeing, honestly, like that work for a while, that was when I really started to think more broadly. And I always say the straw that broke the camel's back was two things. One is representing Blackstone at 1140 Avenue of the Americas. So as you mentioned, the majority of what I did was tenant rep work. I hated working on agencies because of, again, how much work you had to do in order to just make a fraction of the actual fee. But after representing Blackstone, I had I think, firsthand seat into how they use information. But what really blew me away is that they didn't have the technology that they were using wasn't any different than any of the other landlords that I had represented in the past. And so you have the largest, most sophisticated investor of real estate in the world, essentially using Excel to manage a large portfolio. And at that time, my best friend, Nick, who's my co-founder, I've known him since I was 10 years old, started just talking about our problems. I think we shared, an unbelievably similar view on what the problems were and how they could be solved. And so that was really when we decided to start the business.
So, as I remembered, I think the business was in beta stage, or maybe it was launched already, but early days when we would go in to pitch new clients, we would, because I guess the first evolution of the business was digital video production. And, for tenants and brokers to be able to view the space, either before they actually saw it, or, it could be shared amongst the key stakeholders in the process. So we would go pitch new clients and say, hey, look, we know you have private equity investors, you have a board, you have VCs. Once we get down to the final 2 or 3 options, we will have these videos for you, along with all our analysis.
Create a digital tour book.
Create a digital tour book to distribute to your stakeholders, so you can make your decisions faster.
That's right.
Right? So, okay, so then you end up transitioning from the brokerage business to VTS kind of full time. With Nick, you start building out a team, developers, sales, everything in between. And then, kind of talk us through, where are you in year 3, year 4, year 5? So now you have this like digital video content. You have people literally walking through offices in full body cameras.
With steady cams,
Right? And it was definitely catching on, where landlords were utilizing and purchasing your product, your service. So, and same with brokers, especially the landlord listing brokers. So kind of now you're in year 3, year 4, year 5. Where is the business evolving at this point?
Yeah, so we went from, again, so I think the vision was always big, right? And so we wanted to do 100 different things, but you're right, and the first problem that we wanted to solve was, at the time, I think we estimated that 95% of spaces on CoStar didn't have any visual content, right? So no photos, no videos. And so as a tenant rep broker doing a survey in the market, it was both a huge pain in the butt for you to actually understand, okay, if I want to be efficient with my customers' time, how do we narrow this down quickly to the top 10 options in the market and make sure that instead of 5 tours, we're taking them out 2 or 3 times. And so we thought that would be solving a huge problem for the tenant rep broker, but also a huge problem for the landlord, because as you know, as a tenant rep broker, and this is what I always tell, or I still to this day tell landlords, is that the number one way to not make the tour is if a tenant rep broker is not 100% confident around what he's going to see when he walks into that space. And I don't care how prolific you are as a tenant rep broker, you can't know every single space in every building in a 350 plus million square foot market. And so it was a huge risk to the landlord to not just give the tenant rep broker what they wanted. And so we thought that video would be an easy way to just help everyone in the market get value. But we then knew that sort of step 2 would be both layering analytics on top of that video, right? So how do you help somebody understand how interested a customer is based upon their engagement with that video? And I think the stats are still true to this day. If somebody clicks 5 times, it's typically turning into an in-person tour. If somebody clicks 15 times, they're typically trading paper. And anytime somebody clicks, I think north of 40, 50 times, there's typically a done lease to back it up, right?
So when you say somebody, you mean people at the
tenant. At the tenant.
At the tenant. So company A, they looked at a whole variety of spaces. Once they start zeroing in on a certain building or space, clicking through the videos quite a bit, you have the information, like the more clicks equals more, the higher probability of getting
100%. 100%. Yeah. And so that analytic, that was like analytic number 1 that we wanted to layer on top of the video and start to introduce a concept that candidly has existed in other industries for 20 or 30 years, right? So like, we didn't invent that concept, we just borrowed it. The thing that we really invented for commercial real estate and sort of the next step was, because the vision was always around, how do we just create a lot of efficiency in the market and ultimately make the industry much more data-driven, which I'll come back to in a minute. But the thought process there was for an agency broker, right? So now we helped you create more visibility for your space in the market, and you're doing this other thing offline, which was very inefficient, which was your leasing activity report. So as you started to see a lead come in and inquiries coming in from tenant rep brokers, we wanted to be the place where you started to track that data. And my favorite part of the whole story is it took us the better part of 2 years to, get people on the right side of Park Avenue to understand that they did things the exact same way as the people on the left side of Park Avenue, right? They were all tracking leasing activity in Excel spreadsheets, and largely it was the same 25 data points, all organized in different ways, right? And so everyone's initial reaction to standardization was, no, our reports are the best. We do it so much differently. And we were at the point where we've seen all I have them. I'll show you, right? You guys are all doing it the same way, and there's 2 detriments to doing it that way. Number one, your agency teams are highly inefficient, right? The fact that they can't log a tour the minute they left a showing with a prospect, where all that information is really fresh in their head through their mobile application, is just crazy. At this time it was 2000, and this time probably about 2014, 15, when the world had just moved on at that point to kind of a mobile first everything.
Yes.
And ultimately, once you started to capture those 25 data points, you can start to unlock a real understanding of demand dynamics for your building and for your portfolio. And so it was about that time we were raising our Series A, and our thesis to our early investors is commercial real estate is one of the largest industries in the world, but the last to still be making its biggest bets based on backwards looking information. And so the vision was really about how do we harness all of the real-time data, and then ultimately start to unlock that to effectively start to create the Bloomberg screen for commercial real estate.
So you convince the brokerage firms and the big institutional landlords that digitizing leasing activity reports, which will then yield more real-time information. And by the way, we also know, besides it being a big waste of time for the landlord brokerage teams logging information in Excel, it's also like when you do it on a digital platform, you can't make up the information.
Yep.
It's just like you know who came, the size of the requirement. It can't be. The information's more accurate
100%.
for the owner.
Yeah.
And then they can start tracking the pipeline on what converts.
That's right.
So now you go raise a Series A, you have some real institutional backers that start buying into this thesis, and they're probably realizing it full time as customers, right? Seeing how the information transcends into making better decisions.
Yep.
That's really it. So fast forward, you build out and scale that platform, and you eventually go global with it, right? I think you expanded into London, you expanded around North America, and then into London.
That's right.
Right? So that was, say, in the late, call it the latter half of the 2010s.
Yep.
Right? 16 to 20.
It was, I would say, it was probably around 2015 we made the decision to open our office in London. And I think it was about 2015. And the reason for that, I think it's a really important part of the story, which is we had a competitor in the market, a company called Hightower, and it was a kind of brutal war between the two of us. I think our focus was very clearly on the enterprise, and their focus was kind of more on the regional players. And I think at a certain point they realized that we were winning the war because of the gravity that we had within the institutional community, right? So ultimately at the end of the day, there was this gravitational pull towards new customers that were evaluating both of us, and they're saying, okay, well, if Blackstone and Tishman and Brookfield and all these companies that we sort of look up to have kind of all selected VTS, it's sort of like the no risk. It's the no risk decision to go with VTS, and so we wanted to push harder on that, and so we decided to open our office globally so that we could fundamentally tell the story to the large institutional players that this isn't just a tool for your portfolio in New York or North America. It is global, And so it was around that time that we really decided to lean into the strategy of trying to win the enterprise. And in 2016, we actually wound up acquiring Hightower, which is one of the best decisions that we've ever made.
So you acquire one of your big competitor, and they had, they probably had certain sectors of the market that you didn't have, so that was a creative acquisition. And then fast forward, so you continue to build out and scale the business, acquiring more institutional customers. You have the brokerage firms, big brokerage firms on the platform as well. And then a few years later, I think you started getting into the tenant experience realm, if you will. So, you've been serving the big institutional landlord community. You've also been diversifying your product type, right, out of office and into warehouse, distribution.
Office, retail, industrial, and now multifamily in a big way.
Now multifamily. So talk us through kind of before, I know multifamily's a little newer, right?
Yep.
But kind of the evolution of getting into the tenant side. So the tenant experience, and like now you've been serving the landlord and owner community, the investor community, and now you've been evolving over the last few years into serving the tenant community.
Yeah.
I think you had a couple acquisitions as well. This was maybe 2, 3, 4 years ago. So kind of how did that evolve, and where do you see that business evolving to?
Yeah, so I think everything that we've done around tenant experience, I always say it's probably the one thing that we're doing that we never thought of early on, right? So I think there's still a long list of things that we thought about 12 years ago that we would still like to do. But tenant experience almost kind of came out of nowhere. I think as, even when I was a broker, there's been every year, I think, a more consistent and pronounced trend around flight to quality. I think COVID really had a extreme forcing function on every market, right? If it's going to be hard to get people to come back to the office, we want them to have the best experience when they're going to be here. And at the time, I would say 2 years before that, we did a huge build versus buy analysis, and we're like, hey, look, this is a really complicated sector. There's so many players, either, we'll never get into this or we'll wait it out. And so fast forward, COVID happens, and as mentioned, I think everybody realizes that the experience of the building is going to be more important than ever. And so at around that time, we just heard from all of our customers, them picking up the phone saying, hey, are you guys going to get into this? Because if you're going to do this, I'd rather do it with you than somebody else. And so we decided to make two strategic acquisitions. One was a company called Rise, and their focus was much more focused on property operations. So think about it as work orders, visitor management, things like that. And so that was our first acquisition. Actually, the reason that we loved them as a business is because they started in the multifamily space. And there was a founder there who was very, very talented, and he had just a great vision for how this technology could be applied really across every sector. And so we decided to make that our first acquisition, and then did a quick follow-on acquisition with a company called Lane, who's based out of Toronto, and their focus was much more on what I like to think of as like the front end of tenant experience. So think about it as buildings that were highly amenitized, that you had a real operation around trying to create an ecosystem within that building. And so the vision became, how do we really bring the best of both of these technologies, the same way that we did with VTS and Hightower, and how do we bring them together and have it make a 1 + 1 = 4 scenario? And so the tenant experience sector has completely changed our business and is probably one of the biggest growth sectors that we're focused on for the next couple of years.
So you're seeking to have customers, like big enterprise clients, customers that they use your service for booking lounge areas, food ordering, visitor experience, employee experience, everything that's connected and it's all going to be done mostly by the phone, right?
That's right, 100%. Yeah, and I think one of the other aspects that a lot of people are now trying to play into is if you're an owner that owns 2, 3, 4, 5+ buildings, how do you actually create a network across those buildings to provide almost like a Soho House type amenity for every employee in every one of their buildings. The thing that we think is going to eventually be a huge growth area for us is actually putting that software in the hands of tenants to manage their own suites. So think about it today, they use our mobile application to actually get in through the turnstiles in a building the same way that you do in the subway. And a lot of tenants that now have that in place at the base building level, they say, well, I want that for my suite too. And so now we're providing that same ability to access their suite and then operate their suite through our software as well. And you have people like Tishman Speyer and Paramount that are, I think, way ahead of the curve in terms of trying to partner with us to make sure that every tenant understands that offering. Because ultimately, if the tenant software is connected to the software of the building, it's just going to be a more seamless, better experience. And so we have a lot of our large sort of white glove landlords that are starting to lean into that as well.
So do they, on the tenant's app, is it still a VTS product or is it white labeled?
It's all white labeled to the building, yeah.
To the landlord.
Which is something that's very important to, as you know, the brand of the building needs to come through, and so everything that we do is white labeled.
Okay, perfect. So, got it. You're providing all the infrastructure. So that's a huge growth area for the business. And then I guess why don't we kind of fast forward to present day? So at that last investor conference that I was at maybe 5-6 months ago, your team was just explaining the growth opportunity in the residential sector vertical that you're now have gotten into. So how I'd love to hear kind of how that transition happened or is going, and then where do you see the opportunity there?
Yeah, I think so. Multifamily is, as we think about it as our priority sectors for the year, it's right up there, probably tied for number one. And the problem that we're solving there is a little bit different, which we're really excited about. So the multifamily sector period has just been much further ahead in terms of technology adoption. I think the downside of that is now they have a lot of technology, right? So one building might have 8 different types of software that they're using to manage the building, and there's also a huge hardware component as well. And so our offering on the multifamily side is very much focused on systems consolidation. So how do you take that stack of 7 or 8 software and hardware providers and get that down to 2 or 3, with us being the biggest driver of that consolidation. And so we have an amazing product, I think an amazing story for the market. We signed a huge partnership with Greystar, who's the largest third-party manager in the multifamily space, probably 2 years ago. And we're on track to break 1 million units live on the platform this year. And so they've been a great partner, somebody that has really pushed us in terms of product development. But if you look at just the institutional capital and where it's focused, I think you'd be hard-pressed to find an institutional investor that doesn't say that multifamily is sort of number 1 or 2 on their focus sectors, and most people say it's sort of sheds and beds. But one of the things we love about multifamily is if you just do a historical analysis on the flow of institutional capital into the sector, it's the only one that has consistently gone up into the right and has had the fewest kind of dramatic it's had the least number of dramatic upswings and downswings. And so we did an analysis probably about 18 months ago. Listen, we were always very excited about multifamily, but I think it's just clear as day that if you look at the institutional capital, if you talk to our customers, multifamily has to be a sector that we have a lot of focus in. And I think that's going to be instrumental to our long-term growth as a company.
That's huge. You got the multifamily sector, and then you just recently launched your AI suite. If that's the way to categorize it.
Yeah.
AI. So that's even new for me. So
Yeah.
I'd love, maybe we'll kind of, start wrapping things up to hear about where you see that's going, your AI product, how that's integrated, and we got to hear your predictions for the future.
So the AI one is interesting. I would say, we've been focused on AI now for the past 18 months, but about 6 months ago, our largest investor, Insight Venture Partners, who is also probably, if not the largest, one of the largest venture firms in the world, called us in with about 15 different companies, and we spent a full day together. And they really opened our eyes to the art of possible and in terms of AI, and gave us some unbelievable examples of companies that have made the transition to sort of traditional software to AI first, with their point being that if you are not an AI software company, you won't have a company within the next 24 months. And so I think that went from us kind of thinking that AI was important to us fully transitioning into an AI first company. And I think the eye opener for us is, as founders, was this isn't just about the product, it's also about the way in which you operate every facet of your business. And so we have been sort of living with the Insight Partners team, who have been providing us an unbelievable amount of support in terms of making it through this transition. And I think there's a few things. Number one is, it is our belief that AI is going to dramatically change the way we do everything, the way we work, the way we live, the way we communicate. It will be probably one of the biggest transformations in the history of mankind. And I think it wasn't until I got really deeply into understanding the art of the possible that we got to this place where, all Nick and I do every day is talk about what else we could be doing from an AI perspective, both internally and externally. So last week was a big week. We launched the first version of our AI platform, and it's been a huge success. And going forward, it's the only thing that we will do, are AI-driven products. And to put that into perspective, as you can garner from this conversation, right? We've spent the last 13 years developing software and data that helps people better manage their portfolios. Going forward, probably the biggest focus we will have is developing AI agents that will fully augment the teams of our customers, whether you are a landlord, whether you're a broker, whether you're a tenant. Because at the end of the day, if you're not doing that, you're dead as a software company. And if you're any one of those people that aren't fully thinking about how do we start to move exponentially faster through agentic agents, again, we just fully believe that you will lose in the market. And so, that's where we are today, but it's just the beginning.
So I couldn't agree with you more that the way we conduct business, do business, provide service and advice and information to our customers is going to look vastly different in 1 to 2 years. Definitely, certainly in 2 years.
For sure.
It's happening very fast. And I think, just kind of going off of, I do these quarterly updates with Matt Schreck, our head of research, and we talk about the prior quarter, and that's great, historical information. But I think, where we want to be when we're providing guidance and advice to our clients is telling them, either with certainty or with very high probability, where things are going to be in 90 days.
Yep.
And I think having a software or a platform that gives us that tremendous insight will be invaluable. It will need to be incorporated into every company that provides information and advice is going to have forward-looking information.
For sure.
Not just historical.
For sure.
So I think we all see that's happening real time. Ryan, I can't thank you enough for coming in today. This was super, super insightful, and just to hear about the whole journey and kind of where the business is evolving. I told you before the show I do this hokey thing where I ask for our guests little predictions. I have a crystal ball here. Kind of where do you see your business and our collective business if you look, 3 to 5 years from now, like how does it look? Does our business still exist, or it's going to exist, but it's going to be vastly different?
Yeah.
Just love to hear your perspective.
Look, I think the reality of it is if you really understand how capable AI is today and how fast it's moving, it's virtually impossible to predict where we will be 3 to 5 years from now. Other than I am certain, and listen, I can remember when I was still a broker 12 years ago or 13 years ago, however long ago it was, we were having conversations around how our roles would ultimately change, how the roles of the service providers would change. And I think it's been this slow tick, year over year, where it kind of, you have to be more consultative and, have to bring more services to the table. And I think the service providers and landlords have been forced to do that at a tremendous cost. And so I think for the landlord community, for the service provider community, the technology now exists to start to actually be able to provide better services to your customer, ultimately the end user, the tenant, while maintaining your actual margins and hopefully growing your margins, which I think is win-win for everyone,
Yes,
right?
Definitely.
Everyone is working hard, right? More hours than they would probably like to admit. But I think we do wind up in a place where there's just a lot more equilibrium in terms of higher quality of service for ultimately the end user, and having service providers that make the right investments and are able to actually maintain and grow margins in a world where today, if you look at any of the publicly traded companies, it's really hard for them across a lot of these service lines to maintain margin. And that's just, if companies can't make money, there won't be a company. That's right. So I think that's the one thing I will say about our industry. I think it's headed to a place where everyone should be a lot happier, provided they make the right technology decisions.
Able to do more with less.
You'll be able to do more with less, and the experience and opportunity to earn will be better for everyone.
Yes.
So
that's awesome.
Yeah.
Tremendous insight.
Yeah.
Brother.
Thank you for having me.
Thank you. That concludes another episode of the Midtown View. I'm your host, Jim Wenk. Until next time, we'll see you again.